Hey everyone, welcome back to Corporate Decoded, the place where we dive deep into the soul of big companies and sometimes find out they are not wearing any clothes. Today we are unboxing Artisan Partners Asset Management Incorporated their 2025 annual report. And let me tell you, this filing is thicker than a financial advisor after a merger. We are going to cut through all the jargon and find out if this investment firm is truly a golden goose or just another fancy gilded cage. So buckle up, hit that subscribe button and join our amazing Discord community linked below for more unfiltered corporate insights. So what is Artisan Partners Asset Management, or APM as well call them? Well, they are basically money managers. They help institutions and really wealthy individuals invest their money hoping to make it grow. And that $179.9 billion in assets under management as of the 31st of December 2025, that is a lot of zeros. And it means they were managing almost 12% more money than the year before. If we look at their average assets under management for the entire year, meaning they weren't just holding onto it for a few days, that also went up by about 8%. Now, you might think that managing more money means they are making more money, and you would be right. Their total revenue for 2025 was $1.197 billion. That is a 7.6% jump from 2024, which sounds great on its own. But let's see how that stacks up against their costs. The biggest chunk of any investment firm's expenses is usually its people, and Artisan is no different. Their compensation and benefits cost a whopping $649.6 million in 2025. That is a 9% increase from the previous year. So while revenue grew by 7.6%, their biggest expense grew by 9%. That could start to squeeze their profits if this trend continues, and even more concerning is that the long-term incentive compensation part of that bill jumped by nearly 33%. Remember, these are awards for their top people, often tied to company performance, so a big jump here suggests they might have had a really good year, which is good. But it also impacts how much cash is left over for you if you're a stockholder. Now, Artisan likes to talk about its adjusted operating margin, which was 35.3% in 2025, up from 33.8% in 2024. This basically means after they strip out some special items, their core business is running pretty efficiently. But remember that 9% rise in compensation. That is a core part of their business, so when they adjust that out, we need to be careful not to get too rosy a picture. The gap between revenue growth and compensation growth is something to watch. Now, managing money is all about keeping your clients happy so they don't pull their money out. Artisan experienced net client cash outflows of nearly $13 billion in 2025. That sounds like a lot of money walking out the door, and it is, but it is important to understand the context. Artisan's equity strategies saw significant outflows, meaning clients pulled money out of their stock-focused investments. However, their credit and alternative investment strategies actually saw inflows, meaning clients put money into those. So it's a mixed bag, some clients leaving their equity strategies, but others coming in for different types of investments. Diving deeper into their investment teams, the growth team, which manages strategies like global opportunities and US mid-cap growth, had an assets under management of almost $30 billion. They saw some mixed performance, with their global opportunity strategy being a leader. The International Value Group, on the other hand, is their giant, managing over $53 billion with their international value strategy alone. This group is crucial to Artisan's overall success, and thankfully their performance numbers here look quite strong. What is really interesting is this value added metric. It tells you how much better their strategies performed compared to their benchmark. For example, the International Value Strategy added 515 basis points since its inception, meaning it beat its benchmark by a significant margin over the long haul. This is what clients pay for, and Artisan seems to be delivering on this promise for some of their key strategies. When we look at how the company's stock has performed, the comparison to the S&P 500 and the Dow Jones Asset Managers Index is telling. While the stock market rebounded strongly in 2025, Artisan's stock performance, as measured by cumulative total stockholder return, lagged behind these broader market indexes. From a $100 investment, Artisan's stock grew to about $121 by the end of 2025, versus the S&P 500, which grew to almost $196. This suggests that while Artisan is growing, its stock performance hasn't kept pace with the overall market. Now, let's talk about the cash they are returning to shareholders through dividends. Artisan intends to pay out about 80% of its quarterly cash generation as dividends. In 2025, they paid out over $3.60 per S-share. That is a solid dividend, showing they are committed to returning value to shareholders. But it also raises the question of how much they are retaining for future growth and investments. Now, for something that sounds incredibly complex but has real financial consequences, tax receivable agreements, or TRAs. Basically, after their IPO, Artisan made deals that let it pay a portion of future tax savings to certain partners. They have a liability of over $300 million related to these agreements. This is a massive obligation, and it means a significant chunk of any future tax savings is already earmarked for others, impacting how much cash is truly available for growth or dividends. Let's briefly touch on the risks. They are heavily dependent on their star portfolio managers, and losing key people could hurt them badly. The competition is fierce, and the industry is always changing. Plus, managing all that money across different strategies and countries means a lot of things can go wrong, from operational glitches to cybersecurity threats. Looking at the bottom line, Artisan Partners' net income attributable to them was $290.3 million in 2025, a 12% increase from 2024. Earnings per share were also up. This is good news, showing a growing profitability. So, what is the story here? Artisan Partners manages a vast amount of money and has some strong performing investment strategies, particularly in international value and credit. Their dividend payouts are attractive for investors. However, the compensation costs are growing faster than revenue. Client outflows exist in their core equity strategies, and those tax receivable agreements are a significant financial drain. The company is also a bit late to the party on alternative investments compared to some competitors, although their recent acquisition of Grandview Property Partners signals a strategic move to broaden their offerings. While they are profitable, the key challenge will be maintaining that profitability while facing industry headwinds, particularly the persistent pressure on fees and the need to innovate beyond traditional equity strategies. Alright, that is our deep dive into Artisan Partners' 2025 filings. What do you think of their performance and strategy? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up, subscribe for more insightful corporate analyses, and join our Discord community, linked in the description for real-time discussions and early access to our content. Thanks for watching, and we'll see you in the next Decode.